Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with news of more gloom, unfortunately, from the Euro region. The Spanish bond market continues to slump. Yields, which move in inverse direction to prices, rose to record highs. This was after a poorly received auction of 3-month bills by the Spanish government. The 3-month bill was sold at 3.7%. That's up from 1% as recently as March. The Spanish 10-year rose to 7.63%. Remember, anything above 7% is seen as unsustainable. And because there's fears about the needs for a Spanish bailout, Italy's bond market is also in retreat. The 10-year there, 6.61%, again unsustainable. Just to give you an idea of how high they've gone, the New Zealand 10-year bond yield is 3.27%. The Australian 10-year bond yield at 2.76%, and that's symptomatic of people moving their money out of Europe, particularly Southern Europe, into safe havens like New Zealand and Australia. Also, they're moving into the United States, where the 10-year yield fell to a record low 1.39%. That is the price of fear. There was also record demand in a US 2-year bond auction. It was 4 times covered. $35 billion was sold at a price of, get this, 0.22% for a 2-year bond. There was more bad news from the European services and factory output data, fell again in July. And EU officials say that Greece is likely to miss its debt targets. This is triggering new talk of an exit by Greece from the euro. And Moody's has warned it may cut the German and Dutch AAA credit ratings. That saw their bond yields rise. Now, all this fear means that people are taking money out of riskier assets, so the New Zealand dollar down to 78.6 US cents from around 78.9 US cents yesterday. I'm Bernard Hickey. That was 90 at 9 from interest.co.nz.